Hi there, Adam Gower here, and today you are getting a very special podcast. This is actually a recording of a conversation that I had with the founders of 4 of the top online real estate syndication companies, aka Crowdfunding, with Steen from Crowdstreet, with Jilliene Helman from RealtyMogul, with Adam Hooper from RealCrowd, and with Charles Clinton from EquityMultiple, to commemorate the 10th anniversary of the passing of the Jobs Act that gave birth to the real estate crowdfunding industry. As always, if you are not a subscriber to the GowerCrowd.com website, please go and sign up. We send out an educational email newsletter every Wednesday that gives you full details of everything you need to know about the industry, what's going on, how to access opportunities, and lists out every deal that is active that week. That's all at GowerCrowd.com. Okay, now, without further ado, here is the special event that we put together on April 5th to commemorate the 10th anniversary of the passing of the Jobs Act. Enjoy.
See? Here we are. Oh my goodness. Thank you so much, everybody. All 4 of you for joining me. I'm really grateful for you being here. We're going to start right away. We have almost 50 people so far, and we'll let others come in as we get going. But in the interests of time, I'm going to kick us off. Here we go. I have a few prepared remarks. Only takes 25 minutes or so. Don't worry, I won't take too long. I'll try and make it quick. Thank you, everybody, for coming. Thank you to my panelists. Thank you to all of you for joining us. I am Adam Gower, the founder of GowerCrowd, and it is my great pleasure to welcome you to this commemoration of the birth of a brand new industry, the online real estate syndication industry, also commonly known, if slightly erroneously, as the real estate crowdfunding industry. 10 years ago, to the day and almost to the hour, the Jobs Act of 2012 was signed into law, following bipartisan support by then President Barack Obama. Here's some of what he said at that momentous signing occasion 10 years ago, slightly paraphrased. One of the great things about America is that we are a nation of doers, not just talkers, but doers. We think big, we take risks, and we believe that anyone with a solid plan and a willingness to work hard can turn even the most improbable idea into a successful business. For startups and small businesses, now he didn't say this, I'm going to say this. Remarkably, despite having been the biggest beneficiary of the Jobs Act, real estate was not considered a target industry for the Jobs Act. This bill is a potential game changer. Right now, the president continued, you can only turn to a limited group of investors, including banks and wealthy individuals, to get funding. But because of the Jobs Act, startups and small businesses will now have access to a big new pool of potential investors, namely the American people. And for the first time, ordinary Americans will be able to go online and invest in entrepreneurs that they believe in. Indeed, and this is important, some entrepreneurs may turn a big idea into an entire new industry. That is the promise of America. That's what this country is all about. And that, ladies and gentlemen, is what our guests today have done for the real estate industry. They have forged a path for us all in creating a brand new industry, the industry of investing in real estate syndications online. There are no disruptions here. No one was disintermediated. No one was put out of work. The industry simply did not exist before the Jobs Act of 2012. And my guests today are the vanguard of that industry and the revolutionary transformation that has changed real estate finance for us all forever. The leaders of the new industry with us today are Steen, founder of Crowdstreet; Jilliene Helman, founder of RealtyMogul; Adam Hooper, founder of RealCrowd; and Charles Clinton, founder of EquityMultiple. And it is my great pleasure to welcome them here today. Let's get straight into it and start off my first question. Tor, I'm going to start with you if you don't mind. When you founded Crowdstreet on the heels of the Jobs Act, What was the opportunity that you saw?
Yeah, thanks for having me, Adam. Excited to be here. And I know we're here to talk about commercial real estate, but I think when you think about it, it's even bigger than that, because what was happening is alternative assets as a whole. Now, commercial real estate's the largest of all of those, right, are being opened up, right, or being these private markets that for so many years were inaccessible to individual investors because they were only accessible to the largest of institutions or the highest of net worths, could then suddenly be opened up. The regulatory change that you talked about with the Jobs Act was something that was critical to allowing this to happen. My background is in the internet and software space and helping to disrupt industries. And so I think the spark for me was, number one, meeting my co-founder, Darren Powderly, who came out of the commercial real estate industries, and looking through his eyes at how real estate developers and operators raise capital from institutions and high net worth investors. And then personally, being an investor myself and knowing that I did not have access to this wonderful asset class, I thought, wow, couldn't the internet help disrupt this? Couldn't it allow access to more investors in this asset class that, again, we walk by every day in our everyday lives? So when Darren and I got together in 2013, and specifically when Title II of the Jobs Act came out in September of 13, allowing the open access to accredited investors, that was the spark.
Well, that was exactly the intent, wasn't it? Jilliene, how about you? What was the opportunity you saw when you founded RealtyMogul?
Yeah, so I was working in the banking and wealth management industries prior to launching RealtyMogul. And I think the theme that I saw was that our wealthiest clients were real estate investors. So they'd either made their money in real estate or they'd kept their money in real estate. And I grew up in a real estate family. So my grandfather was a developer, mother and father were in real estate. And I always knew that I wanted to go into the real estate industry. And, the Jobs Act was very influential. It was the first time really since the securities regulations in 1933 that there was a major change. And you sort of alluded to it in the opening remarks, Adam, around, I don't think when they wrote the Jobs Act, they were thinking about real estate. I think they were thinking about startups, and they were thinking about, the corner bakery store and the local restaurant and, giving people exposure to different types of assets. And yet I think real estate is going to end up being one of the dominant players in using crowdfunding to democratize access to, alternative investments and namely real estate. So the big opportunity was opening up real estate to a broader swath of investors, kind of given the insight that real estate's a great place to invest long-term. Real estate's a great place to diversify long-term. And it was challenging to access these investments prior to, the businesses that all of us have built. It was very much the old school country club network. It was very hard to source the deals. It was hard to underwrite the transactions. And so opening that up and bringing platforms to fruition where people could invest in real estate in a really easy and simplified manner was kind of the insight, and taking it well beyond, startups and small businesses.
Adam, how about you? What was the opportunity that you saw?
Yeah, so I'm a career real estate guy, and actually, small world story. Darren Powderly and I actually used to work together 20 years ago at the same firm over in Central Oregon, and kind of independently, saw a similar opportunity. Right, I was on the joint venture equity side, helping real estate managers raise capital from institutions, and it was these kind of middle market deals, sub $10, $15 million equity checks that just were incredibly challenging to raise capital from institutionally. And it was just the syndication model. And so we saw in 2011, 12, these, donations-based, true crowdfunding, Kickstarter, Indiegogo, this mechanism of using the internet to build that audience and kind of create this pool of donations-based capital at that time. When the Jobs Act came around and we saw this regulatory change that you can effectively, use the internet as a distribution channel and take that similar model that was growing tremendously fast in the kind of, again, donations based, apply that to the real estate capital markets, just seemed like a natural fit to fundamentally change how you can build these audience, right? And kind of bridge that access from people that are looking to raise capital, people that are looking to invest that just don't have the access to it. We just saw that as a no-brainer, too good of an opportunity to not pursue. And I think that's still at the core of what we're all trying to do, right? Is trying to build this access into this asset class that just historically was really, really difficult to participate in unless you knew the person. I think all of our platforms are kind of trying to, that is the disintermediation, right? Is the person the person that you had to know to get the deal is now our platforms, right? We have that access and that reach to kind of spread that message around. So I think that was the opportunity, was to use the internet as a distribution channel. I think that was just very, very much, a fundamental shift in how the capital markets can function, for sure.
Amazing, right? The internet has come to real estate, finally. Right? It's what really changed. Charles, your background's a little different, isn't it? What was the opportunity you saw when you were sitting there legal beagling?
Well, I think my colleagues here have all hit the major points, just how impactful the internet can be in terms of providing access and transparency into typically or historically opaque markets, right? You see this time and time again. I think real estate was particularly ripe. I mean, financial services as a general matter are particularly ripe. They've been really reluctant to change, in part because you have such huge embedded institutional interests. So those are always the slowest industries to move, but relatedly, they're also the biggest opportunities. I think, from my perspective, I was working as a real estate attorney. Black was my primary client, and watching on a daily basis institutional capital flood into real estate. But I think, echoing what Jilliene said, when it came to actually investing my own money into it, looking what the options were, public REITs, private REITs, really not being able to access that world of deals where people were making just better kind of asymmetric returns, lower fees, just a totally different profile to the more readily accessible vehicles. It felt crazy to me, honestly. I was a little later to the party than some of the folks on this call. I watched Jilliene start her business, saw the early days of that, and sitting in my seat as an attorney, thinking about regulatory changes in the historical sense. When you have these big shifts in terms of how money is allowed to move, markets change, and they change permanently. I think what we've seen, over the long years is it took a long time for the market to get conditioned to this new way of accessibility, for investors to start becoming aware of it. And I think particularly in the last 24 months, you've really started to see mainstream adoption. But I would argue, even in the big sense, we're still pretty in the early innings here, compared to where Betterment is, or Robinhood, that really have customers that are crossing into the millions of people in terms of active customers. The alternative platforms are, they sit downstream from that. So, as exciting as it's been over the last 10 years, I think the next 10 years are going to be a lot more.
Well, it's fascinating to me that, if you think back 20, 30 years, institutions weren't even investing in real estate, right? They didn't invest in real estate. Then there were regulatory changes and they came in. Now they're the biggest investor. To my sense is that is where we are. That's what we're seeing today in the, I know some of you don't like the term, but the real estate crowdfunding industry, is that we are at the very beginning, actually, of ultimately potentially dominating real estate capital formation. Charles, let me follow up with another question for you. What was when you got started with EquityMultiple, what was the deal or the event that gave you the idea, like kind of that tipping point, or that eureka moment gave you the idea that this thesis that you had was going to work?
Yeah, I mean, I imagine everyone on this call has had the same experience, but when we did our first deal, we raised $500,000 for a mixed use development in Brooklyn, and it took us months, and we did absolutely everything we could to find the money for that deal. We put up our website and thought things would just work, and that was not true. And, fast forward a year or two later, when we had our first deal that subscribed in a few hours. And I think that was the eureka moment, right? Is that this is what this can be, where once you have the audience, once they know that this is available, you're really just meeting that supply and demand in a way that the market demands. And, obviously the deal sizes have grown tremendously since then across the industry. The type of operators, type of projects has changed quite a bit over time. But that basic moment, right, of any startup where you have product market fit, right? You just have that demonstration that your customer, the investor, wants what you're offering, which is access to commercial real estate.
Adam, what about you? Was there a moment that just gave you this moment of relief that you're on the right path? having struggled like everybody else.
They happen every day, and then they don't happen every day, right? I mean, it's there's always indicators of going each way. I think it was even before we started the company. I remember the deal specifically that gave us the confidence that this would work, right? And I think there was an inevitability to this happening. It was a real estate manager out of the Northern California. They were buying a deal for 13 or 14 million. And we ended up listing, the firm I was with listed a sister property office building just down the street, another $13-14 million property. And we told him, hey, you should look at buying this one too and get some economies of scale and own a little bit more of the market. He's like, guys, I can't go kiss the wife and kids goodbye, shut the office down for another month and go raise another $5 or $6 million. And there was nothing we could do to institutionally write a check for that size. And so I think there was just this very, very apparent need for these, again, kind of middle market equity checks that just there wasn't a capital source that was reliable for it. And so that particular deal was one of those light bulb moments. And then, the same time we're getting emails from people that we know in the business. Hey, I've got, friends, I've got $50,000. What should I invest in? And, you say nothing, right? That just felt like there was a mismatch there. So I think it was, every deal that we would launch in the early days, we'd launch it on a Friday afternoon. We were living down in Palo Alto, go out and have dinner, a couple beverages, and you come back and it's like, oh my God, there's $750,000 that was just committed to this thing. that was kind of crazy, that this thing that we had built, on the internet, and people that we hadn't met, and, they came and they saw the deal and they liked it and they committed to invest, not insignificant amounts of money. So I think there's still, when we take a step back and really think about the volume of capital that's flowing through all of our respective platforms, it's pretty phenomenal what we've all built collectively in this industry and how much of an impact that's had. And still, to Tor's point, I think this is still, early days, right? I think there's still a lot of room to grow in the space. And Jilliene, you were still, I remember meeting back in 2013, right? You made the same comment of, we have to educate the market, right? I think there's still a lot of education to do. Conversations we have today are still conversations we had almost 10 years ago with both sponsors and investors. So I think there's a lot of those light bulb moments that kind of continue to happen and give you that juice to keep pushing.
I love that idea. I raised a lot of money pre-Jobs Act for real estate. It was always in person, right? Whoever it was said yes while you were there. The idea of going out to lunch or dinner and coming back to see money coming is just mind-blowing. Jilliene, you had a cushy job, a senior position at a major bank doing very, very well. You jumped ship. What was it that gave you the awareness that you'd made the right decision?
Yeah, I jumped ship well before this story, but it was probably early 2013. And the first thing that, I would do every morning is check the bank account, kind of to what Adam's talking about, where, you go to bed at night and you wake up the next day and there's just suddenly money in the bank account. And so I woke up and there was someone had wired us $500,000 the day before. And so I turned to, our employee and I said, hey, have you talked to this investor? And he said, no. Turned to our other employee, hey, have you talked to this investor? No. So that's kind of weird. So I picked up the phone and I called the guy and I said, his name's Jack. I said, Jack, I'm Jilliene. I'm the CEO of RealtyMogul. I didn't have an office phone. I was calling him from my cell phone. This is, pre-office, pre really being an established business. And he picked up the phone and he said, it's nice of you to call me. And the reason that I'm investing with your platform is because I don't want to have to talk to anybody. Click. And he hung up on me. And the thought that someone would wire us $500,000, having never spoken to us, and to invest in, this was an apartment project in Kansas, like that was the wake up call. Right. And I said, if we can raise $500,000 from someone like Jack, we can raise, $5 billion from, the Jacks and people like Jack kind of around the world. So that was the big moment for me that I knew this is going to work. I had no idea that it would work, to the size and scale that we've now grown to as a business. But that was really the eureka moment of, we can build trust on the internet. Right. And that was always the big question, is can you build enough trust to have people invest with you online, in real estate projects that most of these investors never see. They can go step foot on them, but most of them do not actually go and tour the real estate. So that was sort of the moment for me that I knew this was going to work.
Yeah, it's amazing, isn't it? Nobody, having been a developer raising money, one of the things that we dreaded the most was the dog and pony show, if you'll forgive the expression, of going out and pitching to people. Right? You don't want to do it, but the reverse is true, isn't it? That's exactly your point. Investors don't want to sit in 2-hour pitch meetings either. They want to do it online. It's much easier. Tor, when you started a startup. All of you are startups, right? Jobs Act, the definitive reason for the Jobs Act. But Tor, when you started, what was it that clicked and informed you that you were onto the right path?
Yeah, I think similar to, as Jilliene mentioned, hearing from the investors was critical to know that, you could actually, again, on the first project, actually put something up there and it wouldn't be crickets out there, right? And I think the defining moment was after we held the webinar for that very first deal with a great sponsor. And afterwards, I started, kind of like Adam and Jilliene and others have shared, you see the offers being submitted and you're like, wait a second, I've never met these investors before. The sponsors never met these investors before. And I think the defining moment was I actually had two of those investors that invested in that very first deal who actually reached out to me because, again, we were so small. They my email was probably right there. And they said, Tor, I just want to thank you so much for making that webinar available. I would never have had an opportunity to hear from the sponsor, but just as important as hearing from the sponsor was actually hearing questions from the other investors, because I'm a more novice investor in real estate. And there were a couple investors on there that asked really hardball questions of the sponsor. And the light bulb kind of went off and said, what we're doing is we're creating, and again, the internet can do this, we're creating community out there for the betterment of the investors, right? They can learn from each other. They can learn from the sponsors. And when you think of the analog world, that would never have occurred, right? An investor probably wouldn't have been in the same room as other investors talking to that sponsor. And so I think that was kind of a light bulb moment for me. And then I realized later on, as we all did, it was going to take a lot longer to get more sponsors to recognize that this was a new channel and a new platform for them to raise capital.
Exactly. It's been what we've seen really is an explosion of transparency, information, and education that just never existed before, did it? Jilliene, let me come to you. So my question that I sent out beforehand, I'm going to modify it slightly on the fly, if you don't mind. Why is this industry here to stay? And what are the challenges?
Yeah, look, I think you have demand from both sides, right? Industries stick around when you're adding value. And I think that we've all proven that we add value on both the investor side of the platforms and on the sponsor side of the platforms. We recently had a sponsor use our platform to raise 17 million in equity for a development deal in Nashville. And, sponsors want this. Right. I think one of the challenges in the early days was the amounts of equity that they could raise was very small, right? They'd raise $1 million or $2 million per project. That business wouldn't have survived, right? It would have been impossible to build a true business off of that and meet the demands of sponsors and the needs of investors. But that's not the case anymore, right? Sponsors are regularly using our platform to raise 10 million of equity for their project, 15 million of equity for their project, 17 million of equity for their project. And I think you see the investor demand, right? Where investors want this asset class. They want access to the asset class. If they live in, Miami, they also want to invest in Texas and in Washington and in Utah, and they want to build sort of diversified portfolios that they otherwise would not be able to, without platforms like ours, because they wouldn't have those connections to sponsors. So, it always comes down to value proposition. And I think we add value on the investor side, we add value on the sponsor side. I think the biggest challenge is keeping the marketplace in balance, right? We're all running two-sided marketplaces. And so you want to make sure that you have enough investor demand and enough sponsor demand and that you grow those in lockstep. I think that's been the hardest thing for us over the last decade is you don't want to get ahead of your skis on either side of that, right? If a sponsor comes to you and they say, I need to raise $15 million for my project, you want to do everything to give them the opportunity to raise that $15 million for their project, right? They put up sometimes millions of dollars in hard money. And so that's really, really important is growing the two sides of the marketplace in lockstep.
Charles, what do you see as the challenges for the industry?
I agree with Jilliene. I think that the balancing act is definitely the one you feel most on kind of a day-to-day, month-to-month basis, running this kind of business. I think another is having the regulatory environment continue to mature alongside of our businesses. I think you've seen some modifications to the original Jobs Act in terms of increasing Reg A plus from 50 million to 75 million. None of us use it, but increasing Reg CF from $1 million million to a more usable 5 million. But I think that, we're basically all, as popularity, particularly in real estate, has grown, we're basically all pushing the limits in terms of what was imagined at the start of this. So I think that's, certainly something that all have to continue to respond to. The other piece is, something that any real estate business faces, right? Which is just evolving credit standards and changing market conditions. The next 10 years is not going to look like the last 10 years. So I think that, there is a real credit strategy, even for, those of us who are more pure market players versus, hold a little bit more in the asset manager direction. The quality of the investments that are on the platforms is so crucially important, because ultimately, that's the experience of the investor. Part of our core value proposition is vetting these investments, making the investment process easier. So, how you navigate something like rising interest rates is incredibly important, and, something that I think all the platforms, I'm sure, are dealing with at this point, on kind of a week-to-week, month-by-month basis.
So I'm going to key off something that Charles said to ask you a question. Are there any limits, you think, to how big the industry can go?
Let's, I guess, use Blackstone as an example, right? Their B REIT today is raising somewhere close to $2 billion a month, I think. So no, I don't think there's a limit. And I think if we collectively all here would say, hey, we should be doing $20 billion a year plus, right? Online. Now, just like e-commerce, right? And retail, e-commerce is not, 100% of retail sales. So, but I do think that this online channel for sponsors will become a big portion of the way that capital is raised for projects where they do need to raise 20, 30, $50 million of equity, and traditionally had gone to institutional investors to raise that capital, when they recognize that they now have this kind of technology enabled way to raise from the retail accredited investor audience that they never had before. So I think, the limit is so far from where we are today. It's really kind of, it's amazing and it's great, right? But again, it's taken us 10 years to get this far. I think Moore's Law will apply.
That's what I was just thinking.
Yeah, Moore's Law is going to apply here, and we're going to continue to see incredible acceleration.
I was just thinking Moore's Law. Who was it of you that mentioned Moore's Law? And it must have been you, I think. Just what is Moore's Law? Just tell everybody what is Moore's Law.
Back to my tech grounding, I guess, Moore from, who was founder of Intel, right? CEO of Intel, was talking about the processing power and how it can turn over basically every 18 months and the acceleration. Now, that's an old industry, semiconductors. But again, when you look at the change of what happened and the acceleration of computing power, you apply it here and you start to say, what we did in 10 years, we'll do in, 2 years, right? So it's exciting.
The closest I get to that, Todd, my first book took me 10 years to write. My second took me 10 weeks. I'm not sure if that's Moore's Law or just...
Is that Gower's Law? There we go.
That was Gower's. I wasn't quite as diligent on the second book. Let's put it that way. Adam, let's just wrap up with you on this series of questions. Tor talks about the industry growing to potentially billions and billions of dollars a month in growth. What do you see as the challenges? What are the headwinds that this industry that we all represent may face?
Yeah, but I think Jilliene and Charles summed it up pretty well, right? Keeping two-sided marketplaces are very difficult businesses to build at the best of times, right? And so that's always been a challenge thing for all of us. One of the more, I guess, kind of soft challenges is, and maybe we'll talk a little bit more about this later, is keeping investor expectations in line with the realities of the market, right? As Charles said, we're in a very different part of the market cycle that we were in 2013, 14, 15, when we all started our companies. Yields and expectations change over time. And I think that was a challenge that we faced, and I think still somewhat faced, is the disposition of someone that's seeking investments in real estate online by nature is going to be more or they're looking for a higher risk. They have a higher risk tolerance, right? And so they're looking for juicier returns and maybe where the market continues to shift. And we've seen so much money come into the real estate space that yields have continued to compress. And so I think that's one of the in terms of getting to that next level of scale, I think keeping investor expectations in line with where market returns actually are. And then again, to Charles's point, I think once we can figure out a more efficient way to distribute to non-accredited investors, right, whether that's through Reg A Plus or through Reg CF now at 5 million, Fundrise has really been the only one. They're not on here today, but they've been really the only one that's really pushed the Reg A Plus space to like massive scale. Right? I think they're over $1 billion of AUM now. So I think there's certainly an opportunity to look beyond just accredited investors and really look at breaking down those barriers and making this accessible truly to everybody. I think that's one of those next frontiers. That's another kind of step change of where the scale can go within our industry.
Fascinating. Yes. Managing investor expectations. For those of us who have been through multiple cycles in real estate, this industry has not done it yet. So that's really key. And it actually brings me to a question for Charles. In our podcast conversation some years ago, you talked about the need to stay responsive to what investors are looking for. Question: how have what investors are looking for evolved in the last few years?
Fundamentally, I think it's still the same thing that we've all been talking about today, right? It's access to commercial real estate. So at a very base level, it hasn't shifted. I think while deal-to-deal investing remains the dominant paradigm right now, I do think that's starting to change. I think investors are starting to embrace funds and other kinds of diversified products because really, the core need is getting into real estate, right? And having transparency into what you're investing in. But that has been synonymous with deal-by-deal investing. But I think that one-to-one is starting to break down a little bit, and investors are a little bit more focused on the benefits of diversification. I know we've spent a lot of time on this. I'm sure every platform has, on really emphasizing that piece from an educational perspective, creating a portfolio and, lowering your beta by doing that. I know we launched a kind of short-term savings product that's backed by commercial real estate interests, and that's been tremendously successful for us. We close on it every month. We're 2x oversubscribed basically every time. And I think that's indicative of, a little bit of shift in investor sentiment. The other piece, I think, is, given that investors have dealt with more platforms over time, seen some platforms rise and fall in the early days of the industry. I think there's a more focus from the customer on their holistic experience with the platform. So, not just, hey, does this deal have an attractive IRR, but what kind of, are my questions getting answered? Are there good investor relations, customer service? Are the payments and reporting functioning well? Am I getting clear and transparent information? I mean, really, it's a long-term relationship that you have with the investor. We have investments on the short end that are 6 months, but we also have investments that are 5 or even 10 years long. So, the customer's comfort level with you as a platform is really important, and obviously plays into that virtuous cycle of investing more frequently, building a more diversified portfolio. So I think that's been a really positive thing as the industry grows. And I think you'll continue to see more of that. Investors managing their portfolios, thinking about it a little bit more broadly than they did in terms of, hey, I saw this deal, I want to invest in this particular deal.
Perfect. Now that they have the opportunity to be able to diversify. Jilliene, when you and I first spoke, you talked about marketing. This is something I mentioned earlier that I've actually adopted and evangelized. Thank you for mentioning it all those years ago. That marketing, that we were going to see, or that the Jobs Act was going to unleash a marketing opportunity to promote private equity real estate in a way never seen before. Is success in online syndication, aka crowdfunding, still primarily a marketing challenge, or has it evolved into something else, Jilliene?
Yeah, I wouldn't call it a marketing challenge so much as an education and trust challenge, right? In order to invest $100,000 or $200,000 in a real estate deal on the internet, you have to trust the players, right? The platform, the real estate company, the property manager, the construction manager. And it's hard to build that trust in a digital way. So I think for us, the more we can educate potential investors on investing in real estate and help build tools to gain their trust, the more effective that marketing becomes. Right. I think on the real estate company side of the marketplace as well, it's less a marketing challenge and more be successful. right? Success begets success in this industry. So we have a lot of repeat business with real estate companies who have done business with us, had a good experience, and they come back to do deal, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? These real estate entrepreneurs, they want to be in the business of buying real estate, not in the business of raising capital, right? What they're great at is real estate transactions and adding value to real estate and, increasing the value of that underlying real estate asset, not raising capital, right? And kind of making that not a full-time job for those real estate companies. So I think it's building trust. I think it's education. And I think it's, being successful and meeting commitments with real estate sponsors.
Fascinating. It's about the way that we form relationships. Actually, it's changed fundamentally. And Adam, this is what you and I talked about first when just shortly after you'd founded RealCrowd. You said that the need for in-person one-on-one conversations between sponsors and investors had been removed, but that the need for relationships had not. So my question to you is, has that changed since the industry has started growing? What kind of relationships are developing when parties seldom actually meet in person?
Yeah. So we've talked about it, right? The internet is the great connector, right? It takes this one-on-one conversation and instantly goes from one to unlimited, right? One to many. So I think there's the ability to change how you can make those connections through these internet-based platforms. And there's really, I think we've all kind of mentioned it, and Tor mentioned it before too. There's really 3 different relationships that are being formed, right? There's 4 maybe. There's the real estate manager and the platform, right? That's a very, very tight relationship. They're looking at the platform for speed and certainty of capital, and that's a pretty big relationship to manage. There's the investor in the platform, right, which has to kind of elicit that trust and its customer service, and you got to make sure that there's this kind of general customer service, and I think to Jillian's point, education, right? I mean, that's why we've got the fancy mic here. We do our podcast. It's you have to educate and you have to kind of give this information piece. And then there's this relationship between the individual investor and the real estate manager, and seeing those connections is really fun to kind of know that all of our platforms have a role in that, right? So we're on the direct side, so there is very much that direct relationship between the investor and the real estate manager. And I go back to earlier days, we had an investor make an investment on a platform into a deal that was down in Southern California. And a year later or so, the investor was actually the doctor that delivered the real estate manager's child. And they didn't know each other. They didn't have any connection. But until they got in the operating, they're like, oh my gosh, I think I know you. So that's just, there's real world connections to this. And then the final one that Tor mentioned is these investor to investor relationships, right? To be able to build that community and be able to have that kind of collective insight. For a lot of people, this might be the first time that they've ever had access to these private real estate investments. So to be able to, to learn from and kind of leverage this collective network of intelligence and questions and comfort, I guess, in kind of other people that know what they're doing are also investing in this property. That's another interesting relationship. So I guess there's really 4 different kinds of relationships that we're all, you might think it's just a, one relationship with the company and the investor or something, but there's really those kind of 4 different relationships that we're all managing that are possible because of these platforms that we've built, and they each require a little bit of a different touch to manage those. So to me, that's one of the fun parts of this, is to kind of see those relationships develop and evolve, and how technology can play a role in amplifying and creating those relationships with far more efficiency than what it used to be with, picking up the phone or going to do your lunch meetings. I think that's a really, really big shift I think we've probably all seen on our platforms.
Exactly. I mean, this ability to be able to communicate openly online is what is commonly kind of referred to as democratizing real estate, right? This access to information, to contacts, and to networking. Tor, if there were a hardball question today, this is it. It's for you. There are 2 sides to the equation. There are sponsors and investors. And the more investors that come in, obviously, is good. But the other flip side of that is the sponsors. Having now raised $3 billion in equity, an extraordinary number, and increasingly raising money for deals that require $40 million of equity and above, has Crowdstreet actually now stopped democratizing real estate finance and simply become another institutional investor?
It's a good question, Adam. And actually it's interesting because as some of our raises are 25 or $30 million. And to your point, when people hear how much is being raised now, they start to assume, oh, those must be institutional investors putting in big checks. And this is the power of the crowd, right? Is that you can have 400 or 500 investors go into a deal and submit their offers and transact online, and you can disrupt what traditionally was done just with an institutional check. Now, it's taken us all time to kind of graduate up. I think several panelists have talked about the fact that, we've graduated from $1 million, $3 million to 10 to 20 million size, and you start to disrupt that institutional kind of investor. So I don't think we're actually, now we have to hold ourselves in check here, because I think as we all grow, it becomes clear that maybe we're disrupting that institutional investor, and they might look at our platforms and say, "Oh, is this going to give us a different advantage and access?" And I think philosophically, we're all aligned here. We're out to help individual investors gain access. So, again, there's the only way that investors had that access before. I mentioned kind of the Blackstone BREIT, there's been those traditional channels. And I think we've opened up this completely new channel for individual investors, which actually, puts all the power in their hands, which again, the internet's done this to industries before ours. And ultimately the consumer wins. And so I think we all are aligned on that, and out to make sure that happens. And we don't fall into the trap of, oh gosh, now the big institutions have woken up and, they're going to try and, take advantage of the situation.
I love this. I love this talk about institutions, because when you think about institutions, you're talking about insurance companies, pension funds, endowments, etc. Where do they get their money from? Exactly. They get it from the same people that all of you guys are getting it from. It's the same people filtering up to the same deals in a different way. It's absolutely fascinating and inevitable that these two industries, institutional and online syndication, are going to come together. It is inevitable. Tor, let me follow up. I see you just put yourself. Don't think that you're getting a break that quickly. My next question for you, let's talk about some of the current events and what's been going on. What have been the biggest changes you've seen, Tor, to your business as the industry has grown? And in what way is it changing now that the pandemic recedes?
Yeah, I think the biggest changes to our business was, I think I'll reflect back early on. I referenced this in that, we were all pretty excited when we saw kind of investors, and their demand for this. But I think a shocking thing to me was how slowly the sponsors came about adopting this, right? And I don't blame them. They've been doing it a certain way for decades. They, many times their lawyers were like, you can't generally advertise, and use an internet platform. So it took us longer than I would have liked to get those sponsors online. I think we've also, seen that, investors obviously that are new to this asset class, it takes a lot of education. So I think one of the changes is that we had to really put forth, a few years ago, a lot around the education side and putting out research and investment thesis and market outlooks for the investors to help them on the path. As you mentioned, as the pandemic recedes, I hate to say it, but 2020 in a way was a big wake-up call for a lot of these sponsors who've been raising capital a certain way, because we know when there's a shock to the system, usually the big institutional investors will pull back, they'll pause, they'll look at their portfolio, they might realign. And so I think sponsors who had been looking at the online syndication model, and again, these are large sponsors who had no reason to dip their toe in, finally recognized, wow, I should probably open up a new distribution channel for my deals. And I really should take this seriously. And so I think as the pandemic recedes, we've seen, kind of a realization by the sponsors to start making this a part of their strategy. And so I think, it's been, I think, a shot to our all collective businesses. It helped. It hurt, temporarily, but it ultimately helps long term.
Jilliene, did you see the same thing, that everybody going online because of the pandemic suddenly felt forced to work remotely, forced to make investments remotely, do research. Do you see any acceleration of trends because of the pandemic?
I think it helped investors to build trust online, right? I go back to my earlier point around like the real challenge in this business is education and trust. And, you went from maybe some investors who traditionally would go, sit across from their banker or sit across from their investment advisor, their portfolio manager. They would talk through their portfolios, and suddenly that all moved to Zoom, right? And so making an investment over the internet, a lot of folks had to become more accustomed with digital finance, right? And having online bank accounts and doing wires online. And, a lot of folks were afraid to go into a bank branch and sign their name on a piece of paper, right? So they got comfortable with DocuSign and, all of this adoption of technologies that are underlying technologies of our platform, right? We didn't build those technologies, but we've integrated with them to create this seamless online user experience. I think the adoption of those technologies really grew during the pandemic, and that was a big win for us. And I think Tor's point around the sponsors is a very accurate one, right? Where historically they could rely on a lot of these in-person meetings, conferences, they build sort of these one-on-one relationships. And when the pandemic hit, number one, many of those firms stopped investing in real estate because there was fear. And number two, they weren't getting together in person. So sponsors had to find a different way to build those relationships. And so I think the confluence of those two things, the impact on the investors and the impact on the sponsors, actually had a great outcome for our businesses.
Isn't that fascinating? Yes, I certainly saw a strong uptick at the beginning of the crisis. Adam, let me ask you, so since 2012, times have been good. I mean, we had this slight blip, right, with the pandemic, now hopefully gone into the deep past, hopefully. Things have been good for the real estate syndication business that's grown from strength to strength, right, since the global financial crisis, 2008, whenever it was, 2009. For those concerned about economic uncertainties that we see today, inflation, the impact of rising interest rates, conflict in Europe, impact of sanctions, et cetera, is real estate still a good hedge?
I mean, look, we're all real estate people, so of course.
The answer is yes. Now's never a better time to buy.
The answer is a strong yes. I mean, I think it's, and what we saw through the pandemic too, I guess to a point that both Tor and Jilliene pointed to, is the business model that we've been building for the last 10 years is a business model that so many transitioned to during the pandemic, right? This ability to transact online and to function digitally is what we've been building for the last 10 years, right? So I think the transition for our industry was, I think, maybe less of a challenge than some of the other industries that kind of had to spin up from zero to figure out how you operate in this kind of digital first way. But the other thing that came from that too is, I think, all the volatility that we continue to see in the equity markets, right? There's so much volatility out there. There's so little yield in some other asset classes. Real estate is one of the greatest wealth creation tools that there are, right? To Jillian's earlier point, the majority of the wealthiest clients at the bank were real estate investors, right? That's just a tried and true method to both build and preserve wealth. So I don't think the attractiveness of real estate as an investment class is going to go away. And I think the more we can educate and the more we can get people to understand at a fundamental level how real estate investment works and really understand it, I think the better. We did a survey just a month or so ago when the Ukraine crisis was coming on, and inflation and all these things, just to kind of take an investor sentiment questionnaire and take the audience with a grain of salt. But 95% of the respondents said they were going to add to their real estate holdings in 2022, right? So we're self-selected for a real estate investor audience, so that's kind of a throwaway. And no surprises in terms of asset classes, right? Multifamily, number one; industrial, self-storage was number three, which I thought was kind of interesting. Retail, hospitality, kind of rounding out the end. Probably some interesting contrarian plays there in the hospitality and retail space. Relatively neutral in the stock market in terms of how that'll affect their investment decisions. But the biggest concerns was interest rates and inflation, right? I think we're in an inflationary environment. There was a lot of money printed in the crisis that's going to have to be sorted through the system at some point. But real estate is generally a pretty good hedge against that, right? Especially when you look at some of the more higher velocity asset classes, whether it's self-storage or multifamily, where you're able to reset those rents at a high enough velocity that you can kind of capture some of that inflationary pressure. So I think that's a long way of saying, yes, we're big believers in real estate as an asset class. We think it should be in everybody's portfolio. And I don't think that's going to change fundamentally anytime soon.
Right, let's move on. I was hoping to do some Q&A. I'm always worried that we're going to finish in 10 minutes and just sit around looking at each other. And then there's never enough time. So we try and stop at the top of the hour. Let me roll on to some final questions as we wrap up. If we have time, we'll do Q&A. We may not have time, just FYI. Charles, let me ask you this question. Has the growth of the online real estate syndication business been what you expected?
No, I mean, I think that for all of us, the ramp up was much slower than we hoped or thought. I think that the expectation when these laws changed 10 years ago was that this was going to, shoot out of a cannon, and that wasn't the case. And I think that, as we were on the ground and started actually interacting with the customers and understanding why, to Jillian's point, there was just such a massive trust and education gap that, the industry as a whole had to fill. But, on the flip side, I think that I've certainly been very, very pleasantly surprised by the acceleration over the last 2 years. I do think that COVID had a role, taking these secular trends of democratization and access and just interest in online investing and accelerating them. But we're also just at that inflection point from an awareness perspective. And, I think what's happened in the last 24 months is really indicative of the new slope of this industry. And, going to where Tor said on BREIT and $2 billion a month, as crazy as that might sound now, it would have sounded much crazier 2 years ago. And in 2 years, it's not going to sound that crazy, because there really is no ceiling for this because of the amount of demand that's been proven really for generations for real estate. Even when the products for people were pretty poor. I mean, if you think back not long ago, really at the time when we were all starting, I think BREIT is sort of a shining example of the new wave of REITs. But, REITs were taking, between sales commissions and their own fees, taking 14% off the top, but still raising $20 to $30 billion annually because there was just so much thirst for it. And I think, now that investors have, become aware that platforms like ours existed, but also, can compare us to our historical antecedents in terms of, cost and transparency and ease, the growth in front of us is really exciting.
Jilliene, what has surprised you the most over the last few years since you started?
The timeline of sponsor adoption. I think that I believed at least that we'd go to sponsors and say, you can go raise capital on the internet and you don't have to go, run around country clubs. And they would say, great, sign me up. And I think there was a decent amount of skepticism, right? Even sometimes now there's skepticism where a sponsor, will look at us cross-eyed and go, you're going to raise $10 million for me on your, website? And we go, yeah, and look at these, a couple hundred transactions that we've already done and look at the track record. And yeah, this is where the industry is now. But until that money hits their bank account, and they've done business with us or they've done business with another platform, there's still sort of that aura of skepticism. I think, to Charles's point, that's really shifted over the last 24 months. And I think it'll continue to shift moving forward. But probably, the biggest surprise, if I look back over a decade, the first deal that we ever did was $110,000 duplex in Compton, right? Like literally my first deal with RealtyMogul, $110,000 in Compton. And we just worked on $100 million development in the heart of Miami, right? And so when I go, okay, over 10 years, we went from $110,000 to a $100 million project, like, wow, like that's pretty amazing what we've been able to accomplish.
Adam, what has been the most important lesson that you have learned since forming your company that informs your plans for the future?
We were talking a bit about this before, and I think, while we're all almost 10 years into this, it still feels startup-y, right? I mean, there's still daily challenges that we're trying to still problem solve, and we're still discovering new things, and we're looking at new regulations, and we're trying to see where we can kind of still push this industry forward. So to me, I think the biggest thing is just, having that perseverance and the ability to still be learning, right? There's still so much that I think we're all collectively learning in this industry that, yes, we're 10 years into it, but this is, there's no roadmap to how to do this, right? So it's still, there's so much room for us to grow the industry and to still learn. So I think, to me, that's that's one of the biggest things of just kind of keeping it's a fascinating industry, right? It's such an interesting time to see where this can grow and learning new things about how to even just present this information, right? How do people want to consume this information? By and large, we've taken a physical offering memorandum and put it on a website, right? Like there's not a lot of new innovation that we've really seen yet in terms of how we can deliver that information, right? So I think there's still so much more to learn and still so much more to do. That's, to me, as a real estate nerd, keeping my learning hat on, I think is always going to inform how we go forward. Always be open to new ideas.
Perfect. Looking forward, Tor. Let me. So we're right at the end, 5 minutes. So we may not have time for Q&A. Rapid fire, one question for all of you. All right. I know you love to make predictions, right? Past performance is no guarantee of future results, as we all know. But I'm going to ask you to predict. Tor, why don't you kick off? Where do you think the industry is going to be? Not in 10 years, because that's contradicts Moore's law and everything. Where do you think we'll be in 5 years? If we're sitting down, what will we be talking about in 5 years?
Well, it's a great question. I'm going to play off of what Adam just said, and kind of like, when you think about it, we haven't truly disrupted private equity real estate, right? I mean, we've transformed it, no doubt. And again, we all hats off for what we've done, but we haven't changed the real structure of what happens here, right? It's still, for the most part, an illiquid investment, right? And it could be a 2-year horizon, a 5-year, or a 10-year horizon of what's going to happen. I do believe that, again, what we've done already, again, you have to digitize the transaction process first. You have to get the supply and demand working together on this. But I think truly in the next 5 years, you're going to see further disruption where we can actually further kind of take it from an illiquid to a liquid investment. Technologies like blockchain are enablers to allow us to get there quicker, right? None of us are steeped in blockchain, but we're steeped in leveraging technologies and platforms that will help us get there faster. So I think, when blockchain really became popular 3-4 years ago, I was looking at it going, this is great, right? Because the ledger system is going to get simplified. This is going to be an enabler. We'll all be able to leverage this, and ultimately for the benefit of the investors. So to make basically the real estate investing an easier thing for them, because it's still not easy, right? It's not as easy as go on your Schwab, put in a ticker symbol, buy the mutual fund or buy the stock. I'm going to say it's going to take us a long time to get to that point, but I think we will be getting there in the next 5 years.
Interesting. Charles, how about you? Where will we be in 5 years?
Well, I think there's two things that jump out to me. And I think first, you're going to see several players really look like next wave financial institutions. I mean, you've seen it in other part of the fintech world, right? I mean, Stripe really is just it's a financial institution now. It doesn't look the same way as the banks of old. It's doing things differently, but it's kind of risen to a place where it's a semi-permanent part of the financial ecosystem. And I think you're going to see multiple players that are at that scale where they're comparable in size to some of the large, kind of name brand institutional asset managers. So I think that's one piece of it. And I think the other thing is the type of investor is going to be dramatically expanded. I mean, right now, we're really all focused on accredited investors. Fundrise has gone heavily after non-accredited investors, but everyone's mission here is to open up this market to make it more accessible. And part of that has to be expanding who has access to these investments. So I think that as the scale of the platforms grow, as they can better support these higher customer volumes, you're just going to see them start to grow out in terms of the customers that they're focusing on.
Adam, how about you? Next 5 years, what's going to happen to this industry?
I think I'd echo what both Tor and Charles said, right? I mean, true broad-based distribution, right? We've built incredible foundations for that disruption to happen. And you look at any successful consumer scale technology company, and they measure their users in the millions or tens of millions or hundreds of millions, right? We measure it in thousands or tens of thousands right now. So I think there's orders of magnitude greater distribution that we can get to, that once we can unlock that and figure out the most efficient way to truly get to that millions of users scale, I mean, it's going to be a completely different industry. And I think, as to Charles' point, will be a kind of a foundational layer in financial services for the industry.
And Jilliene, last word to you before we wrap up. Where are we going to be in 5 years?
I think it's all about scale. This year I'd surmise that this group's probably going to be involved in around 10 billion of real estate transactions. And I think you look 5 years out and it's 100 to 200 billion in real estate transactions that we're collectively touching. And, that's disruptive, right? I mean, I think we've set the stage for the disruption, and the next 5-10 years are going to be about actually doing the disruption.
Ladies and gentlemen, we're at the top of the hour. For everyone that sent me a question, I'm so sorry. I did agree that we wouldn't go beyond an hour with our guests. So we're going to wrap up now. I just want to say thank you to everybody for having joined. Thank you to Steen, founder of Crowdstreet, Jilliene Helman, founder of RealtyMogul, Adam Hooper, founder of RealCrowd, and Charles Clinton, founder of EquityMultiple, for commemorating the 10th anniversary. Actually, at 11 o'clock it is now, exactly 10 years to the hour that the act was signed into law in the Rose Garden there at the White House. Thank you, everybody, for attending today. Thanks so much for your time. I'll see you next time. That's it for today. Thank you.